In today's video, we're going to be going over market structure in Forex. So in today's video, we're going to be going over market structure, and what we're going to do is we're going to use institutional candles to help us understand what on earth is going on. A lot of people always ask me, how do we know how to determine market flow? How do we know how to determine market structure? And I say, do you know what? Keep it simple. Once you understand this one thing that I'm about to show you right now, then market structure should become easy for you to interpret, determine, understand, all of that. So what I've gone ahead and done is I've gone ahead and drawn up some lines. Basically, all these lines represent candlesticks. So what I'm going to do is I'm going to explain it here first of all, and then I'm going to take you to the chart so you can see it live. If you've not watched part 1, you guys need to watch that. It will give you so much more clearer understanding and help you understand what on earth am I talking about right now. Cool. So right here you can see that we have a push down, a push up, push down, push up. Okay, we generated some lows and we generated some liquidity beneath this low down here. Okay, so I'm going to bring it right here. And so this whole move, the intention of this whole push was to run out the sell side liquidity, as you can see. Now, when we move over to the very top side, we also have a high. So the very first thing to do is to be able to identify the last down close candle or the institutional candle that caused this push up, and then we have another institutional candle that is very high that caused this push down. The one that caused the push up, okay, is your swing low. The one that caused the push up is the swing high. So these are your two swing points. This is a swing point, and that is a swing point. Everything that happens between this range here, the low down here and the high over here, is just trading within the range of this push. So let's just say this was an uptrend. Your aim is to catch a buyer, obviously, within this push up. And so what's going to happen is you're going to constantly get last down close candles within the push up. You're going to get another last down close candle within the push up. And so you're going to get this along the way. But then you have to be able to identify your major institutional candles, this one here and this one here. So these are the ones that are causing the push to the upside. This is the one that caused the push to the downside. What you want to see when price is moving up is you want to see them respecting these last down close candles. This is here is the last down close candle. It runs out the liquidity beneath the low, taps into this last down close candle and mitigates it. Then you have another push up. We have more lows again. And these lows, I've just drawn them up anyhow. They can be all kinds of different lows. But ultimately, what you want to see is you want to see them run out the low, run out the liquidity beneath the low, and tapping into a last down close candle as well. And normally when this happens, when price is respecting last down close candles, we are moving up. We should be bullish on that pair. And what I've done over here is, although this is the whole push down, the intention was to run out this liquidity, you could refine these last down close candles when you go down the time frame to get an even smaller last down close candle, which they could use. So now we've identified that price is going up because it's respecting last down close candles and is violating these up close candles that run out money. So this move here, from here to there, yeah, so let me quickly draw it up. This move here technically would have been a last up that ran out liquidity, but guess what? We violated the high. Okay, so in other words, what are we doing? We're respecting the last down close candles and we're violating the up close candles. So in other words, that's a bullish scenario. And then look what happens. Price then, generates liquidity, is consolidating at this point. It then runs out the high with a last up close candle, and then breaks lower. So the moment they start running out last down close candles and respecting last up close candles, this is when the market in an uptrend would be a pullback. In other words, okay, it would just be a pullback, just a pullback. Because don't forget, we're still trading within this range. This is our low and this is our high. If we're in an uptrend, this is our low here and this is our high. And so whatever happens between this range, this whole range, is still an uptrend. But when the flow is switched, when they start respecting last up close candles and violating last down close candles now. So when it comes to this point here, so how you know price is shifting is the moment it breaks beneath a last down close candle. The moment it breaks beneath a last down close candle, which starts a push, a last down close candle, this is when you should be thinking, okay, cool, price is now going to start pulling back if this is an uptrend. So I'm going to quickly mark it up here. This is the low of the last down close candle, and it was broken right over here. So the moment price breaks this last down close candle, the low of it, okay, let me quickly straighten up a little bit. This is when, if it returns back to an up close candle, this is when most likely you should be catching your trade for a continuation to the downside. But market structure has not been broken, by the way. This is just a pullback. Although price might start heading down now, it's still trading within this range, this low and this high. And so what we do now, we're respecting last up close candles. And then we do it again. We generate some more highs over here. We generate some more highs, as you can see, right? We trade lower, violating last down close candles again. All kinds of last down close candles we are violating at this point. But what do? We trade back up into this last up close candle, and we respect it again. When price gets to this last down close candle, which was the swing point, which caused the push up, two things can happen. We can either trade into this last down close candle, respect it, and push up. And so what would happen now is if we then broke above this last up close candle, so something like this. So what I've done now, so I've literally just added a bit more to this just so you can understand what I'm going to say next. This is what could happen. We can either then respect the last down close candle, which caused the swing move up, or that pole push up, or we could violate it. If price then went ahead and traded into this last down close candle, did not violate the low, as you can see, we traded just a bit lower into the last down close candle, and then we push up higher to take out our last up close candle. This is when the market flow is switched back and we've turned it back bullish again. So this is when the pullback is over. So in other words, what happens is this is when the pullback is over, because we've rallied up with this push up here. We've rallied up all the way here. So this is a whole rallying up. We've rallied up like this all the way. We've pulled back, and now we're rallying up again. We're going to continue to rally up again, and this time it should go even higher than the original. And so this is what you want to see. This is a continuation. This is if you want to stay bullish. So how you know market flow is continuing now is that it's now violated the last up close candle. All you want to see next is price return to the last down close candle and then continue to go up from here. If market flow was switching, price would have to break beneath the last down close candle which started the move. This is the last down close candle which started the move, and then what would have to happen is price would need to break and close beneath the last down close candle which started the move. And I like to see that close on a daily time frame. In this scenario, what I'll be looking to do is I'll be looking for the last up close candle to be respected. So when price then trades back into this last up close candle, there we go, like that. Boom. This is where I'll be looking to catch a continuation drop, a continuation to the downside. So the key here is to mark up your major swing points, your major institutional candles. This one here and this one here would have been your range. No matter what happens when price is pushing lower, it does not matter. If price is pushing lower, it is not a downtrend. Okay, price is just pulling back. When it breaks the low, that's when there's been a shift. And then what you would do, you would wait for price to come up to respect an institutional candle, an up close candle, and then drop again. Just a quick interruption in the video. If you are getting value from this video, definitely subscribe to the channel. Let's get this channel to 20,000 subscribers in 2 weeks. Also, don't forget to smash that thumbs up button. Let's try and get this video to 400 likes. Okay, so here's an example of it on the actual charts. Okay, so this is GBPUSD right now. So what I've gone ahead and done is I've identified my swing low and my swing high. This is my swing high over here, and this is my swing low over here. This institutional candle over here ran the money that was resting beneath these lows over here. You can see some equal lows down here. They ran out the liquidity to the bottom side and then caused this whole rally up to the upside. This last up close candle over here, we took out all the liquidity that was resting in this area over here. So now what have we done? We've identified our range. We've identified our swing points, our major swing points. We have the swing low and we have the swing high. So that means no matter what happens within this range over here, no matter what happens within this range, it does not change the market structure. Our market structure is bullish, as you can see. We are moving up, up. There's nothing stopping it from moving up, okay? So we're very, very bullish in this scenario. All these moves are higher highs and higher lows and higher highs, higher lows, higher highs and higher lows. The fact that this was just a massive push up doesn't change anything. It doesn't mean that now when we're pushing lower, price is going to start going lower. It does not mean that. It just means that this was a very strong push up to the outside, and now this is them pulling back. So now let's just check this out. During this move from this low to high, there's going to be multiple down close candles that runs out liquidity. Let me zoom in. Multiple down close candles that run out liquidity. Multiple down close candles that run out liquidity. Multiple down close candles that run out liquidity. So you're going to get those constantly within the move, but you need to be able to identify the major ones. The major ones, the swing low and the swing high. So this is them identified. And so anything that happens within this range still is just trading within that bullish range. So you're going to be getting last up close candles now. You're going to get last up close candles, as you can see here, that runs out liquidity. When they trade back into it, they don't beat it, but they drop price down. So now let's move on. So we traded down into this range, but guess what we did not beat? We did not beat the last down close candle, or the institutional candle which caused this whole push up. So in other words, we are respecting the institutional candle. As you can see, Yeah, this very low down here, right? We just tapped. If you look to the left, so when I say look to the left, I mean down here. Okay, we just tapped into that last down close candle, and it's very unfortunate that we did it with equal lows. Yeah, we did it with equal lows down here. Very unfortunate. As traders who trade institutional and smart money concepts, we like to run those equal lows, but they did it with some kind of equal lows. Okay, but guess what? Now we have a new low. A new high low. This is the last down close candle that ran out money beneath this low, and it did just slightly tap beneath this low as well, just slightly, just by a pip or so, but still it was the last down close candle. And guess what? It caused the push up to the upside, which also beat this high. So in other words, now we have a new range. So we have a last down close candle right here, and we have our last up close candle right here. So now this is our new range. So now I don't want to see price beat this low. Now we have a new range. This is our new range. We have a swing low down here, and we have a swing high. And so look what's happening now. With these up close candles, they can mitigate these up close candles as many times as they want. Yeah, this would have messed up so many people's psychology. They must have been thinking, look, am I right? Am I wrong? What's going on? It keeps coming back to my entry. What on earth am I doing here? But you need to understand what they're doing. This is a last up close candle. This is an institutional candle. So in other words, what happens is price will come up to mitigate this candlestick multiple times. So in this push up, last down close candles will be respected. So in other words, they never violated beneath the low of a last down close candle. Okay? In this scenario here, they're respecting last up close candles. So this is how you know you should be bearish at this point. But you have to bear in mind your major swing points. Okay, so let's just run it back. So let's just look at this point over here. We have a last up close candle from this low. So let me just expand it out a bit. There you go. This low to this high runs out the liquidity, resting above here. Okay, and then we break lower. There was no mitigation of this last up close candle. So potentially this is where price is going to now. All right, cool. And then look at it now. We also had another last down close candle over here, but guess what? We violated the low of it. It just meant that we're still going lower. If you look at this little portion of price action over here, what's happening? Last up close candle right here runs out the liquidity. Then we trade back into it, mitigating it, and then we drop again. This is where I want to bring your attention to right now. So this is how you know price is switching. So if I zoom back out, here's the last down close candle, the one that caused the move. Yeah, this price here tapped into the last down close candle. This is the very low, and if you look to the left, you can see that we tapped into that last down close candle, but we did not break beneath the last down close candle. What did we do? Look what happened. This is how you know price is now switching back to be bullish again. We tapped into the last down close candle. We then went straight to go ahead and violate a last up close candle. This is when alarm bells should be ringing in your head, that when price returns back to this last down close candle, this is where most likely you want to be catching your entry for a buy. And so what happens? Price returns back to a last down close candle over here. Tons of mitigation taking place, as you can see, a bit of accumulation taking place in here as well. And then we go straight to violate a last up close candle again. This is a switch. This is then switching back bullish again. Okay, this is then switching back bullish. Switching back bullish. So in other words, what needs to happen, the institutional candle that caused the whole push up, we need to get back to that point, which we did. And then from that point, we want to see them violating up close candles. And you can see what they've done. They ran straight up over here. As you can see, all of this ran out a last up close candle. And then we want to see them return back to the last down close candle, respect that, and then run out more up close candles. So this is most likely where you want to be getting your entries on. So when you saw me on Instagram posting my GU buys, this is because I've been loading up down here. Okay, I actually had a position down here. That one was closed off, and I have more positions down here. So this is market structure. You should never ever be confused about market structure ever again, because if you use institutional candles, it should make your life a whole lot easier understanding market structure. Although price might trade back down, no matter what happens within this range, this low to this high, no matter what happens, we are still bullish. The moment it closes beneath this last down close candle, this is when alarm bells are going to be ringing, and then I'll be looking for it to respect the up close candle to then continue the drop. So that is part 2 done. That is how you use institutional candles to determine market flow. If you found value in this video, definitely hit that subscribe button. Just try and get this channel to 20,000 subscribers in the next 2 weeks. Also, don't forget to smash the thumbs up button. We're talking about 400 likes, and then I will go ahead and release part 3, which is how to use institutional candles for entries.